Back in 2008, one monumental collapse literally shook the entire world. Lehman Brothers, a massive U.S. investment bank, filed for bankruptcy. Almost instantly, global markets started crashing hard. So how did this seemingly invincible bank actually collapse? Well, let's look at the root cause. It all started with subprime mortgages. Basically, banks gave home loans to folks who simply couldn't afford them. They bundled these incredibly risky loans together, stamped them as perfectly safe investments, and sold them off. At first, huge profits and rising house prices. But then, people started defaulting and the whole system cracked. Lehman poured billions into these assets. When the market tanked, they were left holding a completely toxic bag. Absolute panic took over. Investors yanked their money out, markets tanked, and institutional trust literally evaporated overnight. Time was running out. By late 2008, Lehman desperately pleaded for a buyer to save them. Nobody came. On September 15, 2008, they filed for bankruptcy. Shockingly, it's still the absolute largest bankruptcy in history. The dominoes quickly fell globally. Credit markets completely froze, suddenly leaving everyday businesses totally unable to operate. This wasn't just some bank failure. It kicked off the Great Recession, forcing massive government bailouts. But the damage was already done. Tragically, millions of everyday people ended up losing their homes. Alongside that huge human cost, trillions of dollars vanished. The world economy was seriously changed forever. Lehman's fall was a huge warning. What happens when our financial systems become too fragile to handle reality?